till now we have been learning about patterns, be it candlestick patterns or price patterns. But from this video, we will be learning about indicators, right? Before we start learning about indicators, one thing that you need to keep in mind is always take trades on the basis of your patterns. Never take trades solely on the basis of indicators. Indicators can be your support system, but not your primary way of taking the trade. So in this video, we are going to learn about two indicators. The first one would be moving average, and moving average can be of two types, simple moving average or the exponential moving average. And the next indicator that we are going to learn about is RSI, or the relative strength index. So let me just go to investing.com. So I realized that not all my viewers would be using Zerodha. So I thought of taking a neutral platform where you can check the stock prices of any stock in the world. Right? Let's take an example of any stock. Say TCS. Let's say TCS. So TCS for NSE. First you go to TCS. Then you go to the technical chart over here. Okay, so once the chart appears here, you can click the candlesticks over here, and you can. So this is the chart of TCS. The first first indicator that we are going to learn about is the moving average. As I said, the moving average can be simple moving average and exponential moving average. So what you do here is you right click, you go to insert indicator, and you type moving average. So the moving average here is the simple moving average that I was talking about. Once you click this, you see this line that has come here, right? And you see this indicator here which has been set on this chart. So the first question that should come into your mind is, how is the line drawn, right? So what moving average does is it takes the closing price of these candles and takes the average out of it. So for example, you can see the indicator that has been inserted here, and it says MA 9, close, 0. So this means that it is taking the closing price of 9 days, and it's making a line, right? So what it does, it takes the closing price of the 9 days, divides it by 9, gets an average, and it draws the line. So for the first 9 days, it takes the price, divides it by 9, takes an average price, and draws a line. All right. Then it removes the first day, inserts the 10th day. Then this again becomes 9 days, and again the average is taken out, and the line is drawn further, and it goes on till the line is drawn completely over the whole chart. What the moving average does, it tells you whether the price is in an uptrend or is in a downtrend. If the candles are below the line, then it's a downtrend. If the candles are above the line, it's an uptrend. All right. So by default, the moving average is 9 days, but you can definitely change it, and you can change it according to your needs. It's said that 9 or 10 days is good for. It's good if you are planning to trade for shorter durations. So if you can see, the price was in an uptrend, and then it came in a downtrend at this position. So if you want to trade for a shorter duration, you can change it to 21 days, and you can see you should still keep holding the trade because it's an uptrend. It's been on an uptrend for a while. And if you want to trade for a longer duration, you can choose the 50 MA. So if you're planning to hold it for a long term, right? So let's just get back to the default, right? So this was moving average. Next, we will be talking about the EMA, or the exponential moving average. So you right click, and you go to insert indicator. You type EMA, and there would be moving average exponential. Click that, and this is your moving average exponential. It's very similar, but what an exponential moving average does is that it gives more priority to the recent price. So if it's of 9 days, the default 9 days, then the first would have less weightage. The first day would have less weightage. The second day would have more weightage compared to this first day. The third day would have more weightage compared to the second day and the first day, and so on, right? So it's a bit more, you can say it's a bit more advanced than the simple moving average, but that does not mean the simple moving average is not good, right? So again, EMA, you can also change EMA according to your needs. Can be 9, 10, 21, 9, 10, 21, 50, or whatever you feel is right. So this was simple moving average and exponential moving average. Next we'll talk about is the RSI. Again, insert indicator, you type RSI, relative strength index, you open that and you will see this part that has come up on your chart, right? So RSI has two levels, two very important levels, that is 30 level and 70 level. What RSI tells you is that the price has gone above 70, that means that the stock is overbought right now, and there's quite a good chance that the prices would fall, right? If it's below 30, it means that the stock has been oversold and the price would be coming up soon, right? Again, as I said, never take trades only on the basis of RSI. Now I'll just tell you a couple of tricks that might help you. First, there are a lot of people who combine two indicators and they take trades. It is not recommended, but you can do that. It can be a bit reliable to you. I mean, it's way more reliable than using one indicator, but I will still ask you to prefer candlesticks or chart patterns above the indicators. But anyway, I'll just tell you this. So let's take a 15-minute time frame. The first combination you can use is a mixture of moving average and RSI. Let's take an example at this point. So if you see here, the price is about to cross the 70 level, and simultaneously over here you can see the price is going below moving average level, right? And if you zoom in, I can see there is a there's a evening star that has been forming here. Never mind about that. So anyway, so this would probably a very good trade because you have a very clear rejection over here, and it is a very clear evening star, and the price has gone below the moving average line. That means there's a downtrend coming up, and it also shows that the price is at an overbought level, so it is very evident that the price is going to fall down. But anyway, if the price is going below the moving average line and simultaneously if the price is going to cross the 70 level downwards, then there is a very good chance that the stock price would fall down, right? And you can see the price fell down till it came to the 30 levels, right? So if you can combine the moving average and RSI, it can be a good trade. It can be a good trade. Similarly, if the price is about to cross the 30 line in an upward direction and the price crosses the moving average line and comes into an uptrend, then you can buy the trade. So you can definitely use the combination of these two indicators to take a trade. But if you have a candlestick pattern or any pattern that is being forming, then you would definitely get a better trade. Next combination that I would like to tell you is the EMA combination. So first you enter moving average exponential and change this to 200 EMA, and the second one would also be an EMA, but you change this to 50 EMA. Right? And if the 50 EMA crosses the 200 EMA line, then you should probably sell the trade and the prices are supposed to go down. right? And if you see at this point, if the 50 EMA crosses the 200 EMA on the upper side, then this means that the prices would be going up for a while now. So you can use these, a combination of 50 EMA and 200 EMA, to take your trades too. In this video, we learned quite a few indicators: simple moving average, exponential moving average, and related strength index. Start practicing these indicators with your patterns and you can take even better trades. So with this, we'll come to the end of the video. You can follow my Instagram handle that would be given here. Till then, take care. Cheers. Bye.